There's a phrase in investing, don't fight the tape. It means don't bet against a stock that's already moving. But what do you call it when the people running the company aren't just not fighting the tape, but they're actively adding to it at the very top? SEC Form 4 is the filing that corporate insiders are legally required to submit when they buy or sell shares of their own company. It's public. Anyone can read it. And because insiders, officers, directors, anyone with access to material, non-public information face serious legal consequences for trading on that information illegally, the conventional road is that when they buy with personal money, they're expressing a view on the company's public fundamentals, not acting on secrets, acting on conviction. This week, 3 Form 4 filings landed for Peapack-Gladstone Financial Corporation, ticker PGC, a commercial bank headquartered in New Jersey with a market cap of about $613 million. Recently, CEO Douglas Kennedy, CFO Frank Cavallaro, and Director Patrick Campion all bought into the company stock with their own money for an approximately combined $549,000. This story diverges from the typical insider buying narrative. In most clusters that can be seen on the SEC forms, the investors are buying the stock after a 20, 30, or 40% drop, and they're buying at what they believe is a discount, and that's the typical buying the book playbook. However, these investors all purchased while the stock was at its 12-month high. Buying near a high carries a different risk profile than buying a dip. When you buy a stock that's down 30%, you're gaining a margin of safety. Even if you're wrong about the thesis, the price has already absorbed a lot of the bad news. But when you buy within 2% of the yearly high, after a 26% run, there's absolutely no cushion. If the stock pulls back even modestly, you're underwater immediately. These investors know that. The CFO especially knows that, and they bought anyway. $549,000 at what is effectively full retail price. That tells you something about what they think the stock is worth relative to where it's trading. They believe there's still room above the high. They're effectively saying, we think the stock is still cheap, even here, even now, even at the top of a 26% run. That's the strongest form of insider conviction that data can show you, and it's probably worth looking into. This video is for informational and educational purposes only and does not constitute investment advice. InsiderCompass is not a broker-dealer or registered investment advisor. Data is sourced from public SEC Form 4 filings. Insider activity does not guarantee future performance. Always do your own research.